Hope you guys are holding up today. It's been a long day. You've had an awful lot of information thrown at you so far, a lot to digest, and I know it's probably tiring. But Simon J has got some pretty revolutionary things to share with you today. So please, try and stay awake and see what he has to offer, because it's very different to most style of trading, as you'll see. First of all, just a quick thing about our session here today, what it is and what it's not. We try not to do webinars that are kind of typical, focused very much on trying to teach you the latest and greatest setup in 5 minutes flat and expecting you to be able to use it. We're not in the business of trying to offer miracle solutions to huge success in a matter of days, and there's no sales pitch in here either. Simon's philosophy, very consistent with mine, is that we like to try and help people by engaging them in the sorts of things that we do, by helping them to get started, for free, to try things for free, see if they like them, see if they work, see if there's a kind of a connect between the style of trading that we do here at the Trader Institute and the individual concerned. So as we were saying earlier, there are an awful lot of sharks out there, and to be able to test drive a lot of these things before having to put any money on the line, I personally feel it's both an ethical and a very credible way of trying to help people in the business, which many find so hard. And so again, what we've got for you is actually a whole bunch of stuff at the end for you to use, try for free, and see how it goes. So what we're going to talk about in this session is, to me at least, and I mean, hey, I've only been trading since 1981, so there's still things for me to learn that I haven't seen before. And what Simon showed me at the beginning of this year is a very exciting new way, certainly new to me and new to most people out there, of trading in good markets and also in bad markets. And this has been a really tough year for the majority of traders, especially swing traders. And what Simon does works in bad markets miraculously as it does in good markets. He gets a bit frustrated at times when it's slow, but the fact is it still pays off. So that's quite unusual. What I'd like this session to be is the start of a profitable adventure for you. What I'm going to talk about is an honest account of how myself and friends of mine as well became involved with Simon, learned what he did, and started to put this to use. I suppose probably about 9 months ago. The reality is that when Simon and I first met, I looked at what he was doing. I copied what he was doing, and I made a lot of money, without any upfront costs whatsoever. And that's what I like about this, the opportunity to try it, dip the toe in the water, get a feel for it, and potentially, make an awful lot of money before even having to spend a penny. And that's the great thing about the way Simon likes to operate. And the interesting thing is, even in the rubbish markets that we've seen this year, what Simon does is he's able to sort of carve out profits, not every day, because not anybody can make profits every day, but virtually every day this year I've seen him walk away at the end of the day with a whole bunch of ticks in the bag. That's rare. There are people that can do it, and there are, but not that many. My background, and just run through this quickly for the benefit of the video. My background is in engineering, not in finance. I've been a consultant to some of the world's largest companies in my time, been trading for a while, I have my own style of trading, my own technology that I invented over the years, because I am largely self-taught, because I struggled when I started trading to actually find anybody that had the faintest idea of teaching somebody new to trade. Fortunately, there are people like Simon around who can change that these days. So it took me a while before I actually carved out my own niche, and as Dan mentioned earlier, I've kind of traded other people's money, during my career. Today, I'm only interested in just trading for myself because, I much prefer that, and I just find I have a much happier lifestyle without the pressure of other people breathing down my neck. As you probably know, I speak occasionally. I've done some training over the years to help other people. I used to write quite a bit about trading, and generally, my kind of sideline is, over and above trading for myself, is to try and help groups of people like you get a bit of a leg up in this business, which is often very, very hard. And as a result of that, I come across the very rare few individuals who are genuinely good at trading and able to help other people, such as Simon, and those are the people that I tend to work with. Over the years, I've done training. I don't train people regularly. I have done training at live events with some of the industry's most respected experts, people like George Kleiman and Jeff Quinto. Damon Pavlatos is an old buddy of mine from many, many years ago. Linda Rashke, we've kind of done training together, advanced training for serious traders who've been able to dedicate, many days of concentrated time to their trading education. Ala Gruta, who you met earlier, is someone I work with on a consistent basis. And this guy here on the left-hand side, here he is. This is Simon, and this is me and Simon in a bar in Toronto a few months ago when we got together earlier in the year. And he's the guy really that you want to be listening to, not me. Simon is a really interesting character, and I hope I don't embarrass him by saying some of these things. I have an engineering background. He's a physicist. And I think we kind of, I think we have a lot in common because of we both share a scientific background. And I think that science has obviously little to do with the financial world, but I think coming up through those disciplines instills in you a certain methodology, a certain degree of discipline that is essential to those careers. And that's why I find people from a scientific background actually make very, very good traders. So I'm delighted that Simon also comes from a similar scientific background as myself. I just need to correct Dan on one thing. You mentioned earlier that Simon's a registered CTA. At the time when we sent you the information, that was correct. Simon has since relinquished his registration just a few days ago, so we really should just straighten the record here and say he's a former CTA because he's now severed links with the regulators, not for any bad reason, just because he didn't want to be a CTA anymore. He is the architect of what you are going to learn today, and he's the guy that should take all the credit for this. Been trading for a long time and also educating people for a long time. And I have to say that Simon, I've met a lot of traders over the years, a hell of a lot of traders, and Simon is one of the nicest guys to work with that I have ever come across in this industry. And you might think that's an unusual thing to say, but I can tell you, if you're trying to learn something that is complicated, something that's technical, and by the very nature of what we're doing here, it does take people a bit of trial and error and practice to get this right. Having a mentor who's got time for you and patience is actually a very, very important attribute. And Simon, my goodness, he's got more patience than anyone I've ever met in this industry. So it may be a strange little thing to say about him, but I actually think from the perspective of somebody trying to learn to copy his techniques. That's a very, very important thing, because an awful lot of traders, especially traders who are out there supposedly trying to teach you and mentor you and help you, an awful lot of them, they're not very nice people, and they don't have a lot of time, and they don't and they don't have the patience that Simon actually does. So I think that's a very important thing to think about. Now, going back to the beginning of the year, Simon called me up one day and offered to show me his type of trading, his strategy, and how it works. And the thing is that I get calls like this all the time. I'm always being offered things by people who've made the latest and greatest discovery, and ultimately you drill down into it. If you take the trouble and you discover all they've done is they've got a copy of TradeStation, thrown a load of junk together, optimized it and said, hey, this is great. And we all know that leads to absolutely nowhere. So generally, when I get calls from people telling me that they've made this miracle discovery, I kind of, don't give them any time to talk to me at all. Simon was different because he said something to me which gelled immediately with my philosophy, which is this: I'm only interested in what happens in the future. I'm not interested in what happens in the past. So if someone has got all this back-tested junk, I'm really not interested. What I'm interested in is, we start today, what happens tomorrow? And the first thing Simon said to me is, don't believe anything I tell you, Simon. Just follow me. Just watch what I'm doing for a few days in real time and you'll see. So he approached me saying exactly what I would have said to somebody else. Let me show it. Let me prove it to you. Let me prove it to you. Don't believe a word I say. Let me show you. And I really like that, because it's at the end of the day, we're in a business where what happened yesterday or last year or 10 years ago is completely meaningless. What matters is what happens tomorrow, next week, and next month, as you know. So he, like me, focuses very much on what happens next, not what has just happened. So I just watched what he was doing. I then started to copy what he was doing. I hadn't got a clue how he was doing it. It was like witchcraft. He just had this amazing ability to find turning points in the market, and to be able to enter trades with like 5 or 10 ticks risk and capture great big long swings that he could sit on for possibly the rest of the day sometimes. So I watched him for probably a couple of days, and then I started to copy some of his trades because the risk was so meaningless in terms of dollars. Why wouldn't I? And I started to earn money, and I actually started to earn quite a lot of money. I pretty soon believed he was onto something with his unique style of analysis. So ultimately, I became his student. And you might be wondering why, after all these years of doing my own thing. Well, there are a number of reasons why I would be interested in learning Simon's strategy. Number one, it interests me. And one thing I can tell you as a trader is you will never reach the end point where, you have got what you need and forget learning anymore. The best traders constantly research. They constantly take in new material, new ideas, new information, analyze them, and learn from them. And I think it's part of having an active mind that's constantly seeking, to hone, refine, and learn more things that actually keeps us, at the cutting edge. Because the reality is the markets change over time. And if you are not prepared to grow as an individual trader, what you'll find is you can become profitable, you can be profitable for several years, and then you start to lose your edge. So I always think it's important to keep an open mind. Hence I said to Simon, yeah, teach me this secret. The other thing is, what he shows you, you can actually use completely raw, out of the box, to produce a weekly income, even during the bad times that we've experienced, particularly this year. That in itself, as on a standalone basis, is to me a pretty good reason to actually learn this. And ultimately, if you're someone like me that's got your own strategy that you've developed over time, you can actually use Simon's methodology to help you refine entries. So for example, let's imagine we have a, we have a trade where I might typically risk I don't know, 50 ticks to get into it. And Simon can find me an entry with 10 ticks risk. Well, the upside is the same. If it works, it works. So the average loss compared to the average winner, if you're able to actually mesh these technologies together, it can make a huge difference to your metrics and your performance. So there are a number of different reasons why, whether you're a completely new trader or someone that's been doing this for 30 or 40 years, there's a very good reason for everyone why they should take seriously the opportunity to learn what Simon has discovered here. And ultimately, I liked Simon enough, I liked his work, that I decided to, come along and work alongside him. So hence, that's why I'm kind of sitting here talking to you guys today. Let me just go through one particular trade that I think was the first trade of Simon's that I ever took, and this will just give you an example of what I mean when I say you can overlay these strategies. Now, this was a gold chart. This is a 1 minute gold chart. This was kind of early sometime this year, and as you can see, gold in this chart is coming down pretty hard. It's kind of been quite meandering sideways for sideways to down for a long time. Suddenly comes to life and breaks south hard. Now, you might look at that chart. Most traders would say, "Heck, I wish I was short." Right now, Simon comes along and says, "Oh, now we want to buy gold," and I'm thinking, "What? You're crazy? You're going to buy gold?" He says, "Yeah, we're going to buy it," and they give us a price 12.18.5. Right, which is, if you like, about where the green line is, and only risk 15 ticks. Now, I trade gold, and I can tell you, trading gold with a 40 or 50 tick stop is tight most of the time. And here's Simon saying, "Yeah, I only need to risk 15 ticks." And I'm thinking, damn, how on earth can you possibly want to catch a falling dagger like that? Now, there's nothing wrong with trading against a trend, but you've got to use wide stops to have normally to have any chance of actually capturing a reversal. Simon's, no, 15 ticks, that's all you need. And I'm thinking, okay, well, it's only going to cost me 15 ticks if he's wrong, so why not? What the heck, let's just go for it. So market comes down and it fills us, and so I'm thinking, right, okay, well, it's only going to be a minute or two now before we get stopped out, so let's just wait and see what happens. So we're long from 12.18.5, we've got to stop at 12.17. And to my amazement, market just kind of turns around from one of Simon's hidden support levels that's not clear to anybody else from looking at price charts, but he's identified that 12.18 is going to be a support level where that market is going to find people want to start buying it. So, here we are maybe an hour later, and the market has actually turned around sufficiently that we're now actually at the point where I've got a buy signal following my own stuff, and that's at like 12.21. Now, so I've already long Simon's trade at 12.18 and a little bit, and an hour later I'm buying another unit at 12.21. And for my trade, there's a 40 tick risk, not a 15 tick risk, a 40 tick risk. And that is a very, very tight stop in this market, because I was not expecting my stop to hold, let alone Simon. So, but I'm saying, hey, Simon's trade is now risk-free because he's tightened his stop up. What am I going to do? I'm only risking 40 ticks on my trade. I'll take that one too. So what happens? Well, suddenly that catch that Simon made right at the bottom there turns out actually to be a bottom, and the market turns around and it just carries on going and grinding all the way back up to way above where it was before it started breaking down. Now, bearing in mind, this is just a 1 minute chart here, so you can see this is probably, I don't know, 3 or 4 hours or something. But at this point, we're like, okay, well, thanks to Simon, instead of having one unit running, I've now got twice as much running, and the first unit that I put on, hey, that's even got $2 or $3 more in it than my own trade. So not only have I got twice as much, Simon's is slightly more profitable than mine. Step out to a 30-minute chart, and here we are a couple of days later, where I finally bailed out about 12.43, and hey presto, I made a couple of thousand per contract on my trade, and another couple of thousand per contract on Simon's trade. So I'm like, Simon, I don't know how you did it, but I really want to know how you did it. So I hope that gives you an idea of how you might use this. If you've got your own strategy that you like, over and above refining your own entries, it gives you the opportunity to double the size on the trades that work. Now, how about that? If it didn't work, you're losing on one contract or one unit, depending on what trade size you use. If it does work, you get the opportunity to have twice the size on. How about that for a benefit? So that was part of my early experience of the Trader Institute and my experience of working with Simon. Now, what he does is he runs a fairly traditional type of trading room for 4 hours a day. People log in, they use GoToWebinar as the platform for, communicating, showing charts and talking obviously about the trades that are being put on. But what I witnessed, if someone said to me, what did you witness when you were taking that trial with Simon? It was, well, traditional trading room, tiny risk per trade on maybe a handful of trades a day. So it's clearly day trading, but not day trading in the sense that we're scalping for 5 ticks here and there. Simon's game is to, yes, take a part of his position off quickly to get the risk out, but he's really trying to catch the trade that's worth 50 ticks, 100 ticks, whatever. And somehow or other, out of his handful of trades a day, 1 or 2 of those would pay out big, and that's why he manages pretty much every day to come away positive, even during these periods of low volatility. But what you might find unusual is that what I thought was, if you're working with such tight stops, it's kind of quite frantic work. Actually, it's not at all. I found it to be a very relaxed way to trade. And the reason for that is because of Simon's ACE methodology, which he'll be talking to you about probably in just a moment. But because of the structured way in which he maps trades out, even though, you've got to be quite tight when it comes to the point of actually jumping in the market, it's pretty relaxed way of trading. And as I say, above all, he banks ticks. Most days, if not every day, even in the junk. And his students, people who are his premium members, get the opportunity in the trade room to practice what they're learning, with him and with the colleagues. And then there are other people like me that are just kind of taking a look to see what's happening and following along with the trade. So, in a nutshell, my experience of Simon's work in the first few weeks was basically I earned a lot of money, and by that I mean 5 figures. Okay, that's before I even learned a darn thing about what he's doing. But that was enough to make me say, okay, I think he's proven to me that this is an edge. And so that's kind of the introduction that I wanted to give you to set the scene. And I really want to hand over to Simon for him to give you his lesson on his volume profile discovery, at least the start of it. He will talk to you now about how he finds these really hidden support and resistance levels and how he uses them. And then once he's given you an introduction to that, then I'm going to talk about how to get the gifts, the trials, and the various things that we've got lined up for you at the end. So enough of my talking. Simon, come in, and Dan, please do me a favor and hand over to Simon.
I got it.
Great. Thank you.
Good afternoon, everybody. Thank you, Simon Townshend, for the kind introduction. Audio, video, please check.
We hear you.
Okay, good. This is Simon Josef, TraderInstitute.com, trading in a live trading room with my members and students daily. Also offering the same signals on Slack, which is a method of a way to deliver the same signals to my members or students, maybe mobile or trading station. They would receive it. For example, here's an example. This afternoon, late afternoon, I said at 12:18, and I typed it. The room was closed, but I said, NASDAQ possible crash to 59.80. If you look at the chart, this was 12:18, and we were at the very top of the movement. I said possible crash to 59.80. It missed it by a few points. You see this? Still coming back down. It was not a tradable situation. I could not find an exact stop loss, but I could see the crash ahead of time, and I typed it. It's time-stamped, so I'm not making this up. This was at 12:18 p.m. Eastern time. So check your chart. You will see I looked at the very top of the move, and I was able to see that the NASDAQ is going to come crashing. And you see the fast movement within probably an hour. It crashed all the way down, big time. But we still have. Then it retraced. But regardless, it's a live trade call room, and we have also Slack. Symbols and things that I trade would be here. For example, I have some of the instruments that I trade, most of them: gold, nat gas, Russell, YM, ES, CL, soy, sugar, wheat, corn, cotton. I have not been trading those for a while because the market has been very bad. No movement. 6B, 6C, etc. And you see on the right hand side is my discovery. This is how I discovered a way of dealing with the volume profile, and I put it on charts. For example, we have it on a daily, on a 120-minute chart, 987 tick chart, 233 tick chart, etc. It is a way of reading the market's zones: continuation zone versus rejection zone, and how it started before, long time ago. Before that, let me go to the idea behind what prompted me into looking into ways of trading the way I'm trading now, the ACE method. ACE method stands for ACE: anticipate, confirm, execute. So anticipate the market, confirm, and then execute. Now most of traders, almost everybody, they use the A to trade. And I'll give you an example. One of the most famous trading indicator nowadays, or since the beginning, has been the Fibonacci numbers, for example. And let's assume that you're trading Fibonacci's, and just for an example, the market is going up. Let's assume it's a crude, and you got it here, and you would think, let me look for a retracement, and I will take it long. Again, it's an assumption. And some of you would say, oh, that's a good idea. Let's look for a 38% retracement. Another person would say, no, 50% retracement is better. Another one will say 62%, and then maybe 76%. Regardless, that's the idea. It comes to 38%. You are looking for 50%. You would say the market comes down, the better for me. You find it bouncing from here. The next time what happens is that you go ahead and you would say, okay, I'll wait for it to come to 38%. It comes to 38%, you take it long, it comes back to 50% and bounces, you lose that trade, it bounces, you try and catch it, it bounces back, and you lose 2 trades in a row. It happens. I don't need to explain it. It happens because you're trading with the anticipated level. You're not trading with confirmation. You don't have any way to confirm. Most people don't have a way to confirm. Now, one of the most famous things or popular things that came along, which I think I was one of the first ones to point to it, was the tape. the bid and ask ladder, and I'm talking about many years ago. And this is a sample of it. I don't use it anymore because I converted to volume profile. Would be the volume, the ladder, bid and ask ladder. I would wait for the ladder to show me some kind of hesitation, some kind of a change in volume or numbers of contracts bought or sold, and I would say, okay, we have more interest in buying from here. It was a little bit successful, but it was not really successful the way I was expecting it. Why? Because look at this. This is the volume that is associated with the numbers on the tape. After all, the volume is taken from these numbers, the buy and sell, right? Now, if I go back and just show you this much, these 2 or 3 bars of numbers, you look at the volume associated with it. Is that enough volume for you to consider trading your money? Absolutely not. So why would I depend on one candle with the numbers on it? Doesn't matter. Even if it's a daily candle, it's only one candle and it's only one sell or one level, one price. There's not much really can tell me, not much told by one candle. Now, give it 2 more, 3 more candles in, and you will see the volume on the right-hand side increasing. You see that? Give it more, and you'll see the volume increasing. Now I have more volume, and now I know what's going to happen before it happens. You see that? And now all of a sudden, I don't see any numbers. They disappeared. So we switched to volume profile, and I have it on Sierra Charts and NinjaTrader, and it's available for all the members. And also with teaching as well, we have full understanding of how it works. On some of the things that will make me understand this, or make you understand this, is the following. Remember, we talked about the long or the short. Now let me show you in a diagram how this works. We do have the same levels right now, but let's assume that you are not looking at random trading. You're looking at levels, and you know how to trade volume. And when the market moved previously on the crude up and down, on the right-hand side, which is similar to let's say looking at it here, and these levels are continuations, rejections, different levels. The market created on the side for you, on your volume profile, on your chart, created levels. One of the level would be, here, volume profile, right here, and we call this continuation. Another level would be, for example, here, continuation, and in between we have levels of rejection. So these ovals are rejections, okay, and in between they are continuation. I'm making it look as easy. It's not as easy as you see it until you indulge into it and learn it, and I make it easy every day, day in, day out. Now let's assume that you're looking for a long on crude. Looking at the right hand side, you know this is a rejection, this is continuation, this is another rejection, and this is continuation, and this is rejection. And this is how exactly the volume profile will show you. And I'll give you some examples of trading that happens. Do you think waiting for a short is okay? Of course. Oh, sorry, a long? Yes, of course, because we're going higher. And at this time, you see we are still within the continuation zone. So I would not look for a retracement at this time. So if I'm long on crude, I will keep my long on until this price. See this price right here. So I would wait for the market. I will take my profits right here. Okay, and I'll give you an example on, and I cannot make this up because this is typed. Whatever signal I gave here on the TF Russell, it was typed, and also I have students with me here today, and they see this. Yesterday, I took a long from the very bottom of the Russell move. okay, within I think 5 or 7 ticks risk. We covered the risk by taking first target, and the market moved in our favor. All morning it was going up, 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 up. And I also, and it's typed, I'm not making this up, it's typed on Slack. I said my last target will be 1517. Last target 1517. You see this? 1517. Of course, we did not get to 1517. We came very close to it afternoon, late afternoon, or in the evening. And I got out with 102 ticks profit. But today, it fulfilled the 1517. Today, it fulfilled, it reached, okay? Now, that being said, this was the idea. If you were long, you need to wait for the profit target here. Of course, you can move your stop loss to lock in profit, but this would be your final target. Now, let's assume that you are looking for a long, you did not take a long. You would wait for the market to retrace back down. Okay, now follow with me, please. Do you think this is a good level for you to take a long? Look where it is. Is it a good area to take it long? Anybody? Of course not, because we are still in the continuation. It's still inside the continuation. No. Now, is this a good level to take a long? Look where it is. It's very close to the rejection. That's a better spot, right? So I would wait for it to come back and maybe poke inside this area, because this is exactly where the rejection is. Now, Simon was talking about small stops. Now, this is the only rejection I have nearby. I would take this trade long. Now, your stop loss, do you think, is it feasible to be here, random stop? Of course not. Is this a good stop loss, the burgundy cross? No. What about the green? That's a best stop loss. Why am I saying green? Remember Simon Townshend mentioned 15 ticks. I don't need to trade with a bigger stop. Why? Because it comes and pokes the green. It will cover this entire level. It will be a 20 tick stop loss instead of just 5 ticks. And let's be negative. Let's talk about, I'm not negative, but let's talk negative. 5 ticks times 3 contracts, that's 15 ticks, times $10, that's $150. That is different than 20 ticks. 150 times 52, that's $7,800 if you do one trade, losing trade with 15 ticks. That's, you know, if you do 20 ticks, 20 times 3 contracts times 10 times 52, that's a big number. So what I'm talking about is worst case scenario, your loss is controlled. Now, today I saw the market, I saw the NASDAQ, this is the TF, I saw the NASDAQ crashing down from this area. Did I take the trade? No, because my assumption or my view was that there is a level higher. This was the end of the continuation. This was the end of the continuation. If I draw this, the continuation looked like this. This was the end of it, and this is the other end of it. Okay, I was looking really forward to taking this big trade short on NASDAQ from 6018 level. It just did not get there. What does that mean? It means once we get to this level, there's a big chance for us to go higher to this level. This is where I will try and take it. So some of you might be asking for some details. Now, the details behind this, it's not explained, it cannot be explained in 15, 20 minutes. Actually, I'll do you harm if I try and explain things, because you'll go ahead and trade according to these explanations. Meanwhile, it takes days, it takes videos, it takes learning, it takes questions, it takes a lot of discipline. One thing about me, if it's not there, I don't trade it. I don't take a trade. I have to see the stop loss ahead of time. I have to know my stop loss exactly. Okay, I can show you a lot of examples. If you go to our website, today and you go to the YouTube channel, today, which is October 4th, today's recap, it's called 16 minutes. This is our YouTube channel. 16-minute video sums up TTI method and offers. You will see, this was taken from today's session, okay? You will see the accuracy, and I think no trader should trade without knowing the volume and the secrets behind it. You have to learn how the volume works. It will help you trade the futures, Forex, options, ETFs, etc. Because the whole system is controlled, the whole trading market is controlled by volume, nothing else. Indicators don't work. We do have some indicators such as the DRL, dynamic reversal level. We have the power lines, we have the price magnets, but there are side supportive indicators, okay? Supportive indicators. For example, if I have a level here and the market is about to touch the top of it and I'm taking a short, if I have a DRL indicator associated with it, which is probably maybe here, this will give me extra confirmation, okay? If you go to TTI website, thetraderinstitute.com, if anybody can post it, please, maybe I can post it, thetraderinstitute.com, at the very bottom, you will be able to see the YouTube channel, okay? Here, I will also send it to everybody here, okay? So basically, it's on the website. At the bottom, you will see YouTube channel, and you can also contact us. Take a look at many things that we offer. The system is not explained in 5 minutes or 10 minutes. We have a very intense education system. Just give me a second. Let me show you just a glance or just to show you. Sorry about this. This is the members area, for example. You see I have level 1, level 2. This is locked only for members, level 3. Level 3, for example, gives you crash course on market, on volume profile, advanced, and we have recorded training, you know, and we have live training. Usually Tuesdays, Thursdays and Fridays, I would open Q&A for students, and I ask questions, I give them answers, etc. Tuesdays and Wednesdays are trials, so stay in touch. Other than that, I will leave it to Simon. I hope we can see you in our trials. Come and see what we do, ask questions. You know, September was bad. September was very, very slow. I know, as Simon Townshend said, many people lost money, many professional traders lost money. I was able to finish up with September with a minor profit. However, October started with a couple of nice trades, couple of nice days. Simon, back to you.
Thank you, Simon. Yeah, I hope that that gives you a flavor for how Simon is able to map out these critical areas of support and resistance, because that's really what it all comes down to. And the thing is, where you saw that Nasdaq falling a couple of points short of his 60-18 level, Simon's discipline is such that he's not going to take that trade, even though it makes a huge profit if you take that. It's simply because if for him to do that, he would have to keep the stop still back above that line, and therefore his initial risk is a lot higher than the 5 to 10 ticks that he typically likes to use. So he will simply say, well, you know, it doesn't meet my criteria. I know it's going to go down, but it hasn't actually hit the level it should have hit for me to have confidence that I want to risk my 5 or 10 ticks. So he will actually let that trade go. And a lot of people would look at that and say, well, that was a missed opportunity. Well, these come along every day. And that's the thing. So what he's trying to do is to get people to focus on keeping risk to an absolute minimum. And if you think about it, there's the old adage about the markets that you've got to cut your losses quickly and you've got to ride your winners. And you cut your losses quickly by only entering where the market does exactly what it's supposed to do. You only have to risk the tiniest amount to get in. And the ones that perform really well, they're the ones that they will pay if you get clipped a few times for 5 or 10 ticks. They will pay that many times over. And I think that's why, Simon, ends the day, most days, positive, even if he does have a couple of losers. The costs of those losers are just so insignificant that, by having the discipline that he does have, that very few traders have. Okay, that makes all the difference in the world, because he's just keeping that risk to an absolute minimum. And the ones that pay, they'll take care of themselves. So what I need you to do, Simon, is if you could just pass me back the screen. I'm going to just go over how everybody can collect free trials and videos and everything. Wonderful, thank you. Okay, yeah, that was obviously a very quick overview of Simon's approach. There is a lot to learn in order to digest this, and as I said at the beginning, I spent 2 or 3 weeks really immersing myself in this to get a feel for it before before I developed the confidence in what he's doing. But having only watched for 2 or 3 days, even though you don't know how it works, you can say, okay, I'm going to actually piggyback on some of these trades because I can make some money, even though I don't know what I'm doing yet. And different people, depending on personal circumstances, will be prepared to do that or not at an early stage or a later stage. Different people, everybody has a different set of circumstances, clearly. And I'm not suggesting to anyone that you should be jumping into the live market and putting money on the line until you're comfortable in doing so. And in my case, that was just because a few ticks here and there don't mean anything to me. I was very happy to jump in quite quickly. But what we want to do is, as I said at the beginning, to start moving you through a journey whereby you can start to understand more about this, more than can be given in an hour on a webinar, and slowly absorb more and more of what Simon has put together. So the first thing that we want to give you are a set of videos which we put together a few weeks ago. These contain a number of different things about the Trader Institute and the volume profile method. There are some lessons in here. There are some webinars in here. Videos about the indicators and how they work. There are lessons on psychology, even some live trading that's been captured on video, all sorts of tips and tricks, and also daily recaps. Not every day, but most days. At the end of the day, Simon records a 5-minute video just covering what the trades were and what levels they were from, how they worked, how they didn't work, the whole shooting match. And what we'd like to do is to get those videos coming to you, so that you've got some education to take away from here that's coming to you basically on a daily basis. So what we've done is put this video series together, and what I'd like you to do is to go and register to start getting these videos delivered directly to your inbox every day, so that you can start to immerse yourself in this different way of trading. What I'm going to do is give you a link in a minute that will take you to a registration box, perfectly straightforward standard registration box, and then we'll start sending you the emails from tomorrow, so you can start to learn more about it. Some of these videos are short, some are longer. The webinars and the lessons are going to be longer videos. The daily recaps will be shorter ones. There's a whole bunch of different videos that we've selected from the members area to give you a really good overview of the Trader Institute and Simon's technology. So I'll give you the link in a minute, and it'll take you here. Just put in your email address, and we'll start to deliver those that video series to you. Just be aware that you know, there's an awful lot of spam around, and we do, whenever anybody registers for the videos, we do make sure that you get a confirmation email to make sure that you know, that we're only genuinely sending these to people who are interested. So when you register, you will get a confirmation email, and you need to find that and click on it and confirm that you do want to be sent these things, because we don't want to be in the business of sending lots of stuff to people who are not interested. So we do make sure everybody confirms that it was genuinely them that put their email address into the website before we send you anything. Then what will happen immediately, you hit the confirmation link, you will come to the first video, video number 1. Here it is. It's called Sample Trades. This one happens to be 18 minutes long, and that's you'll be able to play that immediately. So that basically, you know, that will be it, and then we'll start to feed you the rest of the series thereafter. So that's educational material and hopefully insightful lessons coming to you as the first thing. Next thing we've got is, how about seeing this done live for real, in real time, just as I did at the beginning of the year. So what we're going to do is give you free access to Simon's Trade Room for 4 weeks. So typically what Simon does is he invites guests in to come and look every Tuesday and Wednesday. And what you will find is that typically Simon's trades are worth about 80 ticks a day in live trading. Now, sometimes it's more, sometimes it's less. Simon mentioned just now that September wasn't very good. Well, September wasn't very good, but he made money, right? And so, you know, not very good is a relative thing. For most people, not very good is I lost more of my account than I really wanted to. For Simon, not very good is, well, I actually didn't make as much as I normally like to. So these are averages, but in my experience, during this year's kind of markets, which are heavy going, 80 ticks a day on average is typically what I've seen Simon produce. That's not insignificant. Not insignificant at all, especially as that's kind of, you know, regular. So it's quite possible in the space of 2 days a week for 4 weeks that you will witness Simon make several $1,000s just doing what he's basically demonstrating for real in the room. So now, what you do with that, of course, is another matter. But you know, in my case, I just said, "Oh, to hell with that! I can afford to copy these trades, and I made a lot of money." I am not suggesting that that's for everyone, but that is a possibility. You know, if you like the tight stops and the small risk in the trades, and you want to dip a toe in the water, these are the dates for your trial. So it'll start next week. It'll be Tuesday and Wednesday. Next week, and then for the following 3 weeks. So you get real-time access to what Simon is doing live in the room, and you'll see the trades for yourself. Let me just give you an idea. This is the scoreboard, as I like to call it, of what Simon's trades that are called in the room, and they are put through that Slack service as well. This is what's been produced so far this year. You know, obviously the spreadsheet's got various columns in it, and for each month you can see the total number of ticks that the trades have produced, the number of days, the number of winning days, number of losing days, the largest winning day, largest losing day, etc. Lots of different numbers in there. The key to this, for me, is that if you look at the number of winning days versus the number of losing days, you will get a feel for what I'm talking about when I say, you know, Simon's technique banks ticks pretty much every day. Now, clearly it's not every single day, but the vast majority of days are days where he's going away with ticks in the bank. And then when you look at the largest winning days and the largest losing days, you get a feel for what the extremes are. You know, the losing days aren't horrible, and some of the bigger winning days are considerable. sum that lot up and we come to the total on the left-hand side, 7,741 ticks banked so far this year, including that awful September, Simon, where you only made 300 odd ticks when everybody else lost their shirt. So it gives you an idea of the power of this risk management and volume profile secret, combined that that Simon teaches his students. So give you a feel for what you will be exposed to during your free trial and free access of the trading room. Now, as I say, what you do with it, that's entirely up to you, and I can't and should not prescribe what you should do. All I can tell you is that some people will be ready to jump in earlier and make a few dollars than others, and depending on your personal circumstances, that's a decision for the individual. Everyone, irrespective, if you've got $1 million account, even then you should probably still watch for a couple of days just to get a feel for it and how it works before you start putting any money on the line. And then at a point in time where you've experienced it, you've got a feel for it, you don't yet understand it, but you've got a feel for it, you might say, well, hey, look, 15 ticks here, 10 ticks there, whatever, I can afford that. I'm just going to stick a toe in the water, like I did with my gold trade. There will come a point where your observations will take you to the point where it's difficult not to want to do this. So, and there's nothing wrong with doing this as a completely separate exercise alongside the trading that you do yourself normally. That's what I do. I've got my own trading, and I do that, and being able to work alongside Simon doesn't affect that at all, and nor should it. But this is an additional thing that can be done, because at the end of the day, what we want to do is maximize what we get out of the hours that we spend in front of our screens, right? So the more you can do with the time that you commit your eyes to the screen and your finger to the mouse, the better. At least that's my view on it, because I value my time more than I do other things. So I'd rather be spending my time doing something with Simon when my trades are offering me nothing to do than me sitting there for an hour saying, that's another hour of my life gone by in which I've not clicked the mouse. I've not had anything to do. So it's all about maximizing the time you spend in front of the screen. And this is a way of adding something on that won't necessarily conflict with anything you're doing. It may well enhance what you are doing anyway by allowing you, as I said earlier, to get into trades with much lower risk than you might otherwise take. And so there are a lot of benefits in running this alongside whatever type of trading you do currently. Now, how do you get into the trade room? Well, remember when we registered for the video series, the first thing you do is hit the page with video number 1. We also email you the link to that page, so if you haven't got 18 minutes to spare immediately, you can easily go back to it, find it, and watch it, tomorrow, this evening, or whatever. But underneath the video, right, look down here. There will be a link, and all you need to do is to hit that link, and it will take you to a page where you will be able to get into the Tuesday and Wednesday trial sessions for Simon's Room. So it'll take you to a page like this where it says October trials. Just click on that link, and it will take you to a very familiar GoToWebinar registration page, because that's how Simon runs the room through GoToWebinar each day. Now, you obviously know how to fill in those forms and how to register for a webinar. What I would point out is something important here. That top box that I pointed to with the arrow here, that is actually a drop-down box. GoToWebinar does not make that very clear. And if you click in that box, you will find that there is more than just, a Tuesday, October the 3rd, or whatever it happens to be that's displayed as the first available day, because you'll register for that day and think, well, what do I do for tomorrow? What do I do for next week? That is a drop-down box. So make sure that you check that and don't overlook it when you register to come to the room for these trial days for guests over the next 4 weeks. Third thing we've got for you. So we're going to give you a lot of videos. We're going to give you live access to see it done for real, in real time. Simon showed you earlier the Slack feed. Well, how about you get use of the Slack feed for free for this trial period? So if you can't join the room for a day for whatever reason, then you can just get the Slack service, which works on your computer, it works on your phone, works on your iPad, works on wherever. There's an app that basically works on every different type of machine, so that you can actually see the trades that Simon is putting out. So even though you can't listen to him calling them live in the room, he'll then type them in Slack and say, we know we're buying gold here at 12.1850 or whatever it may be, and 10-tick stop. So even if you're away from your office and you want to keep in touch with it, you will find that you can use the Slack feed. And from now until, the end of this month, the 1st of November, basically, you will have access to that service. And not only does it give you a record of the room trades, but the room obviously operates for 4 hours a day. Later in the day, when we've captured runners, Simon's going to say, well, this is now time to exit some of these. And so what he does is he puts those recommendations out through the Slack feed. So the room's closed, we're just sitting on a runner, and maybe we've got a target and it doesn't quite get to the target, and Simon says, right, we'll tighten the stop really tight here, or we're just going to take it off and bank the 102 ticks or whatever. That will come out through the Slack service. So even if you're able to attend 4 hours a day, every day for this trial period, you still want to get the Slack service for the sort of out of hours service as well. And in addition to everything that you've seen so far, and bear in mind those results I showed you earlier were only futures, there are Forex trades as well. And those only come out through the Slack feed. So a number of reasons why you want to take advantage here of this option to get the Slack feed until the 1st of November as well. So as I say, it's available on desktops and mobiles and basically every type of device that you can think of if you're not familiar with Slack yet. Very easy to install, very easy to set up. And how do you do that? Right, well, guess what? Underneath that same first video where you had the link to set up your access to the room, you will find a great big long URL which will allow you to register for the Slack service. I blanked these out because these are redundant ones. They change on a regular basis. So the correct one will appear on that on the link that you get when you get to video number 1, and that will allow you to register for the Slack feed. So basically everything comes from the same thing. Everything comes from registering for the video series, and you take it from there. And so basically this is what you need. You need to go to this rather long link, which is thetraderinstitute.com/intro-vp-method-video-series. Sorry, it's a long link. We'll type that into the chat at the end, and after I've shown you the last little thing I want to show you, then I'll put it up again as well, so that you don't have to copy it down now. We'll leave it on the screen when we try and deal with any questions you might have. Finally, let's just talk very briefly about the Trader Institute services, because there are 3 main services offered, and I want you to know what they are. Not that they affect you, but these are available on the membership on the site all of the time. You could get these at any time, but you guys don't need to, because you're different. Anyone that pitches up at the site can take Simon's full membership package for $9,900. Sounds like a lot of money. Well, it is. It's a big investment. It's a big investment in 12 months of personal education, training, the indicators, the feed. They get the whole shooting match. After that, second year, third year, if people want to continue using the trade room, much reduced and includes the indicator package as well. Other people just actually want to trade off the Slack feed, which they can do. Maybe they don't want to learn the intricacies of doing this. They just want to copy the feed. And you can do that for for a much reduced fee. We also have the education available actually on its own without the hand holding, without the trade room, and I think that's $2,500. So there are lower cost ways into doing this. But as I say, that's available to anyone that just happens to be passing through the website at any point in time. But we want to try and help you guys. So there is a much easier way to do this with real easy cash flow. And it's basically to do what I did. Okay, and here's how. Register for those free gifts straight away, get started, go on the trial, use that room for 8 days, use the Slack feed, understand the style of trading, get used to it, and when you're ready, start using it to make some money. There's typically about 80 ticks a day of profit, available in the trading that's done, and there's no reason why towards the end of that period you can't start piggybacking on some of those trades. If you're someone like me that's perhaps got a bigger account and you can afford to risk earlier on, maybe after a couple of days you think, hey, well, I want to jump in and start taking some of these trades. Whatever is right for you. But it's quite likely during your 8 days you're going to see quite a few $1,000s worth of trades that are available should you wish to use them. So my recommendation with all of these things is if someone's prepared to give you something on a trial basis, value it, make use of it, make some cash with it. And then at the end of that, you may say, look, I don't want to buy full membership for $9,000. But however, I am interested in learning this. I am committed to learning it. If you'd like to do that, we'll give you a payment plan. Maybe you can pay, a chunk each month. Maybe we find a different formula for the individual. The thing about the Trader Institute is we're interested in helping people actually get to grips and use this methodology and find a way that will work for each individual. If somebody says, look, I need to pay you on a different scheme, a different arrangement, yeah, we'll talk about it. And we have one of the members of the team be more than happy to find a formula that will work for you as an individual. So that you could spread it over 4 payments, you could do all sorts of different ways. You might want to do the education first before joining the room. You might want to join the room, go all in, entirely up to you as an individual. My recommendation, take the trial, dip a toe in the water, start making some money. That's what I did. That's the easy way to earn your way into premium membership, by actually taking the money out of the market to use to become a full member of Simon's Club. Guess what? Dan has already mentioned this, but I'm going to mention it again. Using other people's money. Once you have completed your education, once you've got good at this, once you're able to do this, leverage your skills. You may say, look, I can't afford to have a big trading account and buy the education and do this and do that. Okay, fine. Why don't you start trading other people's money, just like Dan mentioned earlier? And Top Step Trader is one, One-Up Trader is another. However, here's the thing: members of the Trader Institute, we have an arrangement with these guys, and if you're a full member, you don't have to pay those monthly fees. Those are dealt with by us, so that you can basically, once you've completed your education, you're ready to go on the trial, get set up, and we will take care of those fees for you, so that if you want to learn to trade and you then need to get the funding to start earning that 80% that Dan mentioned earlier, then that's basically you're in for free. So that's another way of doing it, but that all comes later, guys. The first thing is you test drive this, you get your head around it, you get used to it, prove it to yourself. You prove it to yourself, just like I did, just like many of my friends have now done, and you do that for free, and that's how you get started. So I'll put that URL up again. Everything comes from there, and this is a good time. I don't know how we're doing for time. I think we're about on time, but if anybody's got any questions for me or in particular for Simon, then please do fire them at us, and we'll do our best to take them now.
We have somebody says that can register. If anybody has an issue with registration, please email us.
Should we put an email in the box?
The website is the Trader Institute, and email J or info at the Trader Institute. We'll take care of that for you. Rob J is saying, I've been a member for a few years, and Simon's room is the real deal. Thank you, Rob. The difference between GTR and the Trader Institute. Well, I started with forexteaching.com 15 years ago. I moved on to futuresfx.ca. From there, we moved on to GTR, and now the Trader Institute. So basically, it's just different names for the same business, or the same. It's just who's with me and what I'm offering. Other than that, I am still the same. It's still me. And you know, Simon Townshend came and started helping, which is made a big difference. Go through the website, please, Robert, about pricing and everything. Contact Jay. We have full information for you there. But basically we don't sell anything until people see the trial, they come into the trial. So please join us. Jay, thetraderinstitute.com. Yeah, contact Jay, or info at thetraderinstitute.com. Both emails would work.
Okay, any other questions? Anyone there?
Is there a replay? Yeah, wave. Anybody wants the registration, whether the room or the Slack, if you cannot get it, email us, please. TradeStation, no, we don't offer TradeStation. Our indicators work with Sierra charts and Ninja Trader. You're welcome, Carlos. Email us, TradeBuster, if anything you need, please. Thank you, folks. Thanks, everybody. And Simon Townshend, thank you. Dan, thank you so much for hosting us.